Hello, hi, good evening, everyone.
Good evening, sir.
So, in the last session, we done that financial statement analysis. In that, we completed the ratio analysis. So, today, let us focus on part one, section B, planning, budgeting, and forecasting, say orientation class. Okay, which will help you to have a strong foundation for the CMA course. As we discussed, let us begin the session. So let us see the introduction to budget, budgeting, and budgetary control. First, we need to understand the difference between these three words. Like I said, we are not learning the budgeting. We are learning in the CMA the language of performance, language of the business performance. So here, introduction to budget, budgeting, and the budgetary control. So let us understand what is the meaning of budget. What is the meaning of budget? A budget is a quantitative plan. Quantitative plan. It is very, very important plan prepared for a future period. Future period. The budgets which we are preparing for the future period. It shows how available resources are expected to be earned, allocated, and used to achieve a specific objective. So here what we are understanding, budget will be prepared based upon the objectives or targets of the management. Objectives, targets of the management. When we are trying to reach the objective of the management. Generally, what is the objective of the management? The objective of the management to have a 1 million sale. 1 million sale. To reach that 1 million sale, what are the key factors to be considered to construct a budget? So here, what are the quantitative? We will make a full plan. In this quarter or in this year, today we are in the month of August. If you ask me, sir, what is our plan? So I will tell that till December, if we reach 500,000 income, so how we will receive? How we will plan? So today I am making the plan related to till December, means the future plan. So budget is a quantitative plan prepared for a future period. Always budget is for future period. So it will show you the available resources. That means if I need a 500,000 sale till December, what I need? I need an ERP software. I need a professional accountants team, right? I need a professional tools, and I must give a corporate tax knowledge and the income tax knowledge and the VAT knowledge to our students, our colleagues, our staff. So these are the available resources. First, we need to plan. And in the budget, I will show you that these many resources we have. We have two bookkeepers, two senior accountants, two auditors. And these resources are expected to earn 1 million, and allocated means here allocation how it will done. Okay, if if Rikesh is my staff, so Rikesh will manage, I will allocate audit to him. For example, Mohammed is there, I will allocate ERP to him. Like this allocations I will use. And used, what applications will use, what materials will use to reach my 1 million. So here, how the budgets we are deciding. Budget means a future plan. When we are making a future plan, you must understand the available resources and how we can earn by using these available resources, and how we can allocate and how we can use the resources available to achieve the objectives. So here the budgets may be prepared for sales budget, okay, production budget, material budget, labor budget, operating expenses budget, capital expenditure budget, cash flows, and overall business profit budgets. These are the very, very important topics. Each and every budget is depending on another budget, or which is the main budget, which is the starting point. First, which budget will prepare? Because here we are understanding the resources, the available resources are very, very important to define in a budget. For example, now if I want to prepare a sales budget, so how much quantity I need to sell? At what price I have to sell? How much quantity I have to purchase? At what price? So, and how I can pay to my suppliers, how I will get an amount from the customers. These all are very, very important elements, okay, key factors which will impact in the preparation of the budgets. Second one is okay, simple definition. Budget is a quantified financial or operational plan for the future period. One is the financial budget. Second one is operational budget. How much we have to produce. For example, seasonal businesses, if you take, in the summer, the ice creams production will be more, right? In the winter, so like this, we need to plan how much productions we have to make. It is called as an operational plan. Financial plan means how much money we require. So, okay. So these things we'll see in detail. But what is the meaning of budget? Next is what is the meaning of budgeting? Budget and the budgeting. Budgeting is a process of preparing a budget. What is the meaning of budget? It's a plan. It's a future plan. Budgeting means how to prepare a future plan. How to prepare a future plan. So budgeting is the process of preparing the budget. Process of preparing the budget. So it involves estimating the future incomes or the resources, because we are preparing budgets. When we are preparing the budgets, first we will take some estimations in future, sir, how much we are planning to get this year revenue. Okay, last year we submitted 100 to 100 returns. This year we will add 2 to 300 returns. This is the estimation. The future income or the future resources. Second one is when you are preparing the budget, step number one, you must have an estimating future income. Second one is identifying the future expenditure and the requirement. Third one is allocating the available resources. Means which staff will do which work. We need to allocate. And setting the targets. Setting the targets. Fifth one, coordinating the activities to achieve the organizational objectives. Coordinating the activities to achieve the organizational objectives. So what is the meaning of budget? Budget means a future plan. Budgeting means the process of preparing the budget. So when we are preparing the budget, you must have an estimating the future income, identifying the future expenses, who is available, the resources available, and setting the targets, which staff has to do what and at how much speed and how many things they need to complete, and into coordinating the activities to achieve the goal. And third one is and simply definition is budgeting, the process of planning how resources will be obtained and used. How the resources will be obtained and used. And third one is the meaning of budgetary control. Budgetary control is the process of planning regarding actual results. Planning means, for example, by using the budgeting, you prepare the budgets. Okay, preparing the budget is sufficient? No, we must control the budget. So we decided that our expenditure will be 10,000. If it is increasing within 15 days, the 10,000 is finished. That means budget is going out of control. So budgetary control is the process of planning regarding actual results, comparing actual with the budgeted, identifying the variance and taking the corrective actions. So three meanings we are understanding together. First one, budget. Budget means planning. Budgeting means how to prepare a budget. Budgetary control. Control means how to control the budgets. How we can control the budgets? So in budgetary control, in budgetary control, we will compare the actuals with the budgeted figures and we find out the variances, not about only the variances, calculating the variances, taking the corrective actions. Why the budget is increased? Why the expenditure is incurred more than the budget? Okay, where we done the mistake? So all these things comes under the budgetary control. Who will do as a management accountant, your responsibility here. So what we are learning in the part 1, section B of the chapter called planning, budgeting and forecasting. Okay, so here I am trying you to educate about what is the meaning of budget and how the budget process will take place after preparation of the budget, how we can understand the variances and how we can take any corrective actions. Simply, budgetary control is comparing actual performance with the budgeted performance and taking the corrective actions when necessary. So what are the meanings? One is budget means a quantitative financial future plan. Budget means a quantitative financial future plan. And budgeting means the process of planning how resources will be obtained and used. Budgetary control means comparing the actuals with the budgeted and calculating the variance and taking the necessary actions when it is required. Clear, online students?
Yes, sir.
Ruhi, clear? Mariam,
Sir.
clear? So we understood the differences between the three words. Very, very important. So what is our objective now? First we learn how to prepare the budget. Then we learn how to control the budgets. So let us understand with our regular one simple example how the budget and budgeting and budgetary control will take place. So simple daily life example is, assumes a student received $500 as a packet money per month. Okay, he prepares the following plan. What is his plan? So college canteen, he will spend $100 and he will spend 100 on the movie and internet, 150, miscellaneous 100 and saving 50. Total budget he planned. Once he got a, see there is no tuition fees, there is no school fees because that is packet money. The other things are parents will pay mandatory things. So when he got a packet money, the activities and budgeted amount, how the structure, what is his activities? Like I will go to movie, I will spend this much of amount in the canteen. Okay, I will go, I will have must have an internet when I will go outside. So like this is he planned. So now this statement is the student's budget. What this statement is called as budget. Budget means planning, future planning. When he received 50, 100, 500 USD, so he prepared his plan. For the future, he will spend like this. The process of deciding how the 500 should be allocated is called as budgeting. So what he done? Canteen only 100 he kept. Why not 200? So this is the process he defined and he allocated. So now assume that by 15th of the month, the student has already spent 75 on movies. So movies budget is 100 for 1 month. But within 15 days, he completed 75. So remaining 15 days, what he will do? He spent more. Actually, 15 days, he must spend only 50. Okay. Now, here, budget for movies 100. Actually, he spent how much? 65. Remaining how much? 25. So here, the student realized that he must reduce the movie expenditure during the remaining. Right? Otherwise, पूरा plan खराब हो जाता. Right? So, this process of comparing the actual spending with the budgeted and taking the corrective actions is called as budgetary control. The budget, the statement, he prepared the statement. What is the statement? A list of activities, okay, and how much amount. The process of deciding how the 500 should be allocated is called as budgeting. Then he spent the money, he compared the budgeted amount with the actual, and he realized that I spent excess amount than the budget amount for first 15 days. Then he decided that in the next 15 days, I will spend for the movie only 25. That means he corrected the action. What mistake is done? This is called budgetary control. Clear? Online students, Mariam?
Yes, sir. Yes, sir.
Imamuddin?
Yes, sir.
Rikesh?
Yes, sir.
Okay. Zarif?
Yes, sir.
So this is we are planning every month. Huh?
Yes, sir.
Okay. So now budget versus budgeting versus budgetary control. So what I am trying to do here, I am trying to give you the differences between these three words. Okay. So what are the differences in the budget, budgeting and budgetary control? Very beautiful presentation. Okay. So first one is meaning. Meaning is a quantitative plan for a future period. Quantitative, what is the meaning of budget? Budget is a quantitative plan for future period. What is the meaning of budgeting? It's a process of preparing the budget. What is the controlling? Comparing the actual results with the budgeted and taking the corrective actions. Budget is a plan, budgeting is the process. Okay, control is taking the corrective actions. Very good. Main functions: plan, prepare, compare, and correct. Plan, prepare, compare, and correct. Focus. What should happen? What should happen? How should resources be allocated? Like the student, he planned what should happen. He will go to movie, he will go to canteen, and lot of things. And what he done is he allocated the money, 100 for canteen, 150 for movie, like this. Why? What actually happened compared with the plan? So what is budgetary control? What actually happened, we need to compare with the plan. Example, student prepares a monthly spending plan of 500. Student decided to allocate the 500 amount the food, movie and internet, etc. And student compared the actual spending with the planned amount. And movie example, budgeted for movies 100. Student allocated for the movies 100. Budget for movies 100. Student allocation is 100, but actually spent 75. So only 25 is remaining to spend for the next 15 days. Management role: planning the target, planning the process, controlling the process. Okay, what is the management target? Why they will ask you to prepare the budget? Okay, to make the plan, process, and control. Timing: prepared before the period, mainly before the period, during and after the period. Budget will be prepared. Like example, now we are preparing the budget for October, November, December, last quarter. When we are preparing in advance. So budgets cannot be prepared after the period. Budgets means it's a future plan. So budget will be prepared in advance. So easy memory technique: budget is a plan. Budgeting means a preparation, and budgetary control means compare and correct. Compare and correct. So these three words are very, very important: planning, preparing, and controlling. Planning, preparing, and controlling. Why organizations prepare the budget? Imamuddin, why the organizations will prepare the budget?
They plan to compare it, sir. What was their planning and what was actual happens. Like they need to know the variance,
Okay.
whether their planning is correct or something is going wrong,
Okay.
or it is under control or like this.
Mushraf.
To protect the
Yes, to protect the future profit and expenses. Rohi,
Yes, sir.
why the companies will prepare the budget?
Basically, organization will prepare a budget to to create a financial plan,
Very
which will
good.
help them to allocate the resources or to control.
Control the resources. Control the financial things. Very good.
Yeah.
Thank you, Rohi. Mariam.
So the organization prepare budgets for their future plan
Future plan.
and
Very
how to use their resources will be expected as they earn.
okay. Thank you. Virkesh.
Budget is we are prepared budget to set the target and
Very good.
controlling.
So, as Rikesh said, first step is to fix the target. Right? As Mariam said, to reach the target, what is our plan? As Ruhi said, to reach the target, what is the financial commitment we have to take? Clear. So now, budget helps the management. Why the organizations will prepare the budgets? Preparing the budget will help. Always it will help the management. So first one is budget will helps in planning the future activities. That's why management wants to plan their future activities. That's why every management wants to prepare the budgets. Second one is coordinate different departments. Coordinating the different departments. Communicate management expectations, because budget will explain. So the target we decided to reach a 500,000 sales. 500,000 sales. So, but actually where we are standing? Actually where we are standing. So here budgets are helping, sir. One day I came, I told what happened, Mushraf, why the sales are not 1 million? No, sir. Please check the budget. What we decided the target is only 500,000. So here, if the budget is there, we can communicate with the management and the expectations as well. Allocate the resources effectively, control the cost and control the expenditure, measures the performance. Measure the performance means we decided to complete 30 audits in the 30 days. 15 days gone, only we completed only 10. So we can understand what is the performance here. We are going slow or we are going fast. So budget, if there is a base, is the budget. If it is there, we can identify the variances. Variances means actually we planned this much, actually happened this much. What is the variance? And if the variance is unfavorable, immediately the management can take the corrective actions. Motivate the managers and the employees achieve the organizational objectives. Why the organization prepare the budget? To reach their objectives. To check the performance of the companies, to calculate the variance, to control the expenditures. So there are many reasons why the organization prepares the budgets. A budget should not be considered merely as an accounting statement. This is very, very important concepts you need to understand. Budget is not an accounting statement. Okay. It is an important management planning and controlling tool. It's one tool, one technique. Ratio analysis, we understood. It's a technique. Comparative common size analysis, it's a technique. And budgeting also one tool, which will help to plan, to process, and to control. So here, the organizational cycle, budget cycle, how that will start. First step number one, organizational will decide the objective. What we have to do? Organizational will decide what is the target we fixed. In the step, once the objective is decided, target is decided, next step we will make a planning. We'll make a plan how to reach the target. To reaching the target, what are our expenses will incur and what resources we will use and how quickly we can complete with the time frame, the planning. Once the planning is done, so we discussed in the meeting, then I said, please prepare the document. Step number 3, here we'll prepare the budget. Once we prepare the budget, we will try to implement, we'll start implementing the budgeting, means plan. Budget is nothing but the plan, right? Once the budget is approved, we'll start implementing the budget. Once you started implementing the budget, we will come to know that what is our actual performance. What is our actual performance? Once you know the actual performance, we will compare the actual performance with the budgeted one. We will calculate the variance and we will do the variance analysis. Then if there is a variance is huge, variance is unfavorable, then we'll take a corrective actions and will improve the future planning. By taking the corrective actions, again we'll prepare the budget. So every 3 months, every month, or every quarter, every half yearly, or every yearly, we'll step number 1, we'll decide the budget, we'll prepare the budget, we'll implement the budget, and we'll come to know the actuals, we'll prepare the variances, and we'll take the corrective actions, and we'll improve the future. Next time, we'll not do the same mistakes again, right? Yes. So that will help. Clear? Understood the budgeting cycle? Dear students. Online
Yes.
student.
Yes, sir.
Rikesh, are you understanding?
Yes, sir.
Yes, sir.
So this is a complete tool. This is a process. Okay, let us understand the full cycle of the budget. We'll go one by one step very slowly, and we'll try to understand. Imamuddin, समझ में आ रहा? Class is useful.
Yes, sir.
Zarif,
Yes, sir.
student prepare this monthly budget. What is the monthly budget? Canteen 100, movie 100, internet 50, miscellaneous 100, saving 50, total 500. But actually incurred how much? Try to find out the variance, please. So student prepare this. First he prepared the budget, 500 I will spend like this. But after 1 month, he realized he spent on canteen 120. Total is 500. Right? He saved in the movies, he spent more on canteen. So overall, within the budget only, 500 only 500. But the internal spending and the activities, sometimes it's more, sometimes it is less. So we need to calculate the variance analysis. What is a variance analysis? Actual minus budgeted. What is the canteen? 100, actually is 120. Spend more. Spend more. So when you are creating the overspent by 20, planned 100 but spent 120. That means he spent overspent. In movies, may less spent. Internet, overspent. Miscellaneous, less spent. And saving is 5. Okay, actual 50, but he saved 45. So below the target, his saving is generally 50. But he spent, he is able to save only 45. Clear? Right? How to understand the variance? And very, very important. Rikesh, a company prepares a detailed financial plan for the coming year. Company prepared the plan. Means budgeting process is completed. The documents containing the expected revenue and the expenditure is called as. The document containing the revenue, expected revenue, and the expenditure is called as, it's a forecast or budget or variance or performance report.
It's a budget.
It's a
Budget.
budget. It's a plan. So correct answer is B, budget. Budget is a quantified financial and operational plan for future. Question number 2, Ruhi, which of the following best describes budgetary control? Okay, A, preparing only a sales forecast, recording the historical transactions. C, comparing the actual results with the budgeted results and taking the corrective actions. D, preparing the financial statements at the year end. Ruhi. Ruhi.
Yes, sir.
What is the answer?
The following just describes budgetary control.
Sorry. Budgetary control means what? Budget is a plan. Budgeting is the process. Budgetary control is comparing.
Actual result with budgets,
So answer is
results, and
C.
taking corrective action.
Answer is C. So correct answer is C. The budget, actual, compare, investigate the variance and make it correct. Arpita, a department has a monthly expenses budget is 80,000. Actual expenditure is 92,000. What is the expense variance? 12,000 favorable, 12,000 unfavorable, 172,000 favorable, 80,000 unfavorable. Second one is 12,000 unfavorable because the spending is more. Very good. The correct answer is B, 12,000 unfavorable. The calculation is 92,000 minus 80,000. 12,000 is unfavorable because the actual expenses are higher than the budgeted expenses. Clear, Mushraf? Favorable matlab? Within the budget. Unfavorable matlab? Over the budget. Very good. So definition of the budget explanatory note. So it's a definitions we are understanding, we understood the meaning, okay, and we understood how to prepare, okay. Now let us understand the definitions. Because different authors are say different, they defined in a different way. If you ask to a audit firm, okay, there is no production in this. We'll say financial. If you ask for a restaurant, production. If you ask to a labor construction company, labor resources also. So here different angles may say different, authors are given a different, meanings. So generally a budget is a formal plan. Budget is a formal plan prepared before a future period begins. It's a plan which is prepared before the future begins. It expresses what organization expected to achieve and the resources it intended to use during the period. A budget may be expressed in, this is very, very important. Budget can be expressed in monetary terms in USD or in aid. Budget can be expressed in physical quantity, means number of units produced, labor hours, kilogram of materials, machine hours, etc., etc. So budget is not only about the money. We'll prepare the budget for physical quantities. What is the physical quantities? Unit of measures. Both monetary and quantitative terms. So we'll prepare the budget. For example, 100 biryanis. What is the quantity we required? 100. What is the cost? What is the selling price? How much? So here budget includes both monetary and physical quantities as well. So here institute definition, according to the Institute of Cost and Management Accountants, a budget is essentially a financial and or using the word means only financial or only quantitative or both. Okay, financial and or quantitative statement prepared and approved before a specific period. Prepared and approved before a specific period, showing the policies to be followed during the period to achieve a particular. Fixing the budget means defining the policies to reach the goal. It may include income plus expenditure plus use of capital. Other definitions simplified. A budget is a written plan. Budget is a written plan covering the projected activities of the business for a definite period. Projected activities of the business for a definite period. Next, what class is regarding, right? Yeah. So Killer and Penera is saying a budget is a plan of action. The second definition is saying budget is a written plan. But third definition is saying a budget is a plan of action designed to achieve stated objectives based upon the predetermined assumptions. Predetermined assumption. And Gordon is defined a budget is a predetermined detailed plan of action. Predetermined detailed plan of action used to guide current operations and subsequent evaluated performance. Evaluate the performance. These are some of the authors' very good definitions, which will help us to understand the budgets. So now the interpretation is very, very important because CMA examines interpretation. For CMA purpose, do not think of budget as simply a statement of expected expenses. But CMA means I know how to prepare the budget. I know how to calculate the variances. This is the beginning. So here in the orientation of our session, we are understanding how to prepare the budgets. But this is not the full CMA. CMA means the interpretation. First one is planning. As a CMA means as a management accountant, you need to do the planning. Management determines what do we want to achieve. Example, target is sales is 10 million. Planning. Second one is resource allocation. To get 10 million sales, what resources we need? What resources we need? So what resources are required to achieve a target? Example, how much material, how much employees, how much cash, what is the production capacity, and what is the marketing expenditure. And third one is controlling performance evaluation. Actual results are compared with the budgeted results. So budgets, then actuals, then the variance, then the investigation and the corrective actions. So step number 1 is budget. Step number 2 is budgeting. Step number 3 is budgetary control. Clear? So essential elements of a budget. From definitions and the important characteristics of budgets, we can define the essentials. Essentials of a budget. So this class is a base class. Okay, very, very important, because there is no directly the CMA class, they will start the solving the MCQs and all other things. So this is very, very important. So it is a statement, a budget must communicate management's intention. Okay, management intended course of action in a clear and organized form. Clear and organized form. It must communicate management's clear. And second one is it's related to a future period. Means budget must be a statement which clearly define what is their plan. First essential element क्या है? Communication. Management should talk very clearly. This is the first important essential element to prepare the budget. Management is not talking. So how can we prepare the budget? You can't prepare the budget. Next essential element is it must be future period. Last year, छोड़ रहे भाई. Next year, what we have to do? What we have to achieve? Tell me, sir, next month how much we need. Tell me, sir, next year how much, what is our target, and all these things. A budget is a forward-looking. A budget is a forward-looking. Example: monthly budget, quarterly budget, annual budget, project-wise budget, or historical information may be used to prepare the budget, but the budget itself concerns the future. So first essential element is clear communication. Second one is it should be related to the future period. And next is it support organizational objectives. We prepared something which is not the organizational objectives. A budget should not exist independently. A budget should not exist independently. It must be linked with organization. Means when you prepare the budget, all the departments must be involved. Mission, strategy, objective, plan, and the budget. Mission. And what is the strategy, sir? How sir? So you must know your target audience. You know must your marketing strategies, how to do, and you know must your plan. Okay. The example, a company objective, increase market share by 10%. Last year say this month we need to increase the 10% of the market share. Okay. Possible budget implications. Higher the advertisement budget. What are the implications? The management said 10% increased. So क्या करते हैं? Higher the advertisement budget. Sir, can you increase the budget for marketing? This is what now. When we are expecting to increase the sales, we have to increase or decrease the production. Decrease the production. Additional sales employees you have to appoint. More sales people will bring the more sales. Increase inventory requirements. Fourth one is it may be expressed in monetary or physical units. Monetary budget, sales revenue 5 million. Physical budget, production 50,000 units. And a budget will maybe the monetary as well as budget may be the quantitative budgets also. Both produce 50,000 units at an estimated production cost of 3 million. Amount भी बताना है, quantity भी बताना है. It is called as budget. No. Amount I will think later. How many products? 10. No, forget about the items. How many? We need how much? Okay, this is the management things. So fifth one is it provides a basis for monitoring and controlling. Budget is the base to evaluate the performance and control and corrective actions. Once the budget has been prepared, actual performance is measured against it. Clear? So example, budgeted advertisement expense is 100,000, actual advertisement expense is 125, variance is 25, unfavorable. Unfavorable. Management should investigate the reason. And when the management will investigate, understood the problem, corrective actions will be taken place. Clear? Online students, Ruhi, Mariam, Rikesh, Imamuddin,
Yes,
Zarik.
sir.
Yes, sir.
Yes, sir.
Interesting
Yes,
or boring?
sir.
How was the class? Is boring?
Nice, sir. ठीक है, sir.
Okay, theory is it's a conceptual class. If you understood these things very professionally, it's very easy to understand the question, what the management is expecting and we are doing. So what we understood till now, we understood what is the meaning of budget, budgeting, budgetary control. Okay, and we understood the word variance, and we understood the interpretation are favorable or unfavorable, and we understood what are the essentials of the budget. What are the how many essentials? 5. First one, clear communication. Second one, futuristic. Right. Third one is support. Fourth one is the budget will maybe the both monetary and quantitative, and last one is control. Boys, the question goes to you. Which of the following best describes a budget? Budget means a report containing only historical financial information, quantitative plan for acquiring a business resources during a specific future period, a report prepared only after accounting period has been ended, a statement used excessively for determining the income tax. Answer is B. So correct answer is B. The budget is a future-oriented quantitative plan used for planning. And question goes to Arpita. Which of the following is not necessarily a characteristics of budget? We understood. First one is First one is communication, the clear communication. Okay. It is not a necessary characteristics. Future period is a characteristics, it's an essential element, and support the organizational objectives. It must always express only no. Evaluation of performance is there. Answer is C. It's not only a monetary. It will be monetary plus quantitative or both. So answer is C. The question goes to Mariam. A manufacturing company prepares a production budget showing that 40,000 units should be manufactured next quarter. This budget is primarily expressed in monetary terms, physical unit, historical cost, or variance percentage. Mariam. Hello. So budget, how to understand? Budget will be monetary plus quantitative. दो भी रहते है ना? So this is in this question they given only 40,000 units. There is no amount is mentioned. So first answer is not. Historical cost, budget should be future, no historical cost. Variance, no variance because this is only we don't know actual. So answer is B, physical. Question will go to Mohammed. Which of the following demonstrates the control function of the budgeting. Establishing the sales objective for the next year, estimating the next year production Excel, or comparing the actual expenses with the budgeted expenses, or forecasting the future economy. Very good. So answer is C, comparing the actual expenses with the budgeted expenses. Correct answer is C. Budget, actual versus budget is the variance, investigation, corrective actions. Clear? Yes.
We cannot say D.
Where is D?
The fourth.
No, budgetary control. No, control में variance calculate करते. What is the budgetary control? Control means comparison of actuals with the budgeted one, find out the variance, find out the reason, and make the correct action. That is called budgetary control. Forecasting future economic conditions or budgeting. Budgeting process, but not the budgeting control. Who will give the answer? Who will give the answer? So I cleared the most of doubts, so Mustafa will give the answer. I guess.
Questions?
Question I will give. A manager says, okay, our budget is finished. Our budget is finished. So there is nothing more to do until next year's budget is prepared. We prepare the budget, that's finished. Again, we'll prepare.
Next year.
Next year तक कुछ काम नहीं है. Till next year, there is no work because budget we prepared, finished. By preparing your budget, our responsibility over? No. Control. Corrective actions. है ना? So answer is no. Answer is no. Preparing budget is only part of budgeting process throughout the period. The management must measure the actual performance, compare with the budget, analyze the variance, and take the correction actions. Exam memory line. Budget is a future plan. Budgeting is preparation of the plan. Budgetary control is compare, investigate, correct. And the 5 essentials of the budgets are: first one, statement, future period, objective, financial, quantitative, and monitoring and control. 5 essential elements of the budgets. Clear? Clear, Imamuddin?
Yes, sir.
Yes, sir.
Yes, sir.
समझ में आ रहा है इमामुद्दीन? उन्हें ज्यादा बेसिक हो जा रहा. How you feel?
No, no,
Any
sir.
clarity?
No, sir. Say yes. Understand.
आना था. दिख रहे भी नहीं, चेहरा भी नहीं दिखा रहे. नाराज है क्या?
नहीं सर. आपसे नाराज होके कहाँ जाएंगे सर?
दिल को खुशी होती थी कैमरा लगा के बैठे तो. These are the very interactive classes, है ना? So आप लोग का presence will give us an energy, to complete the session more, effectively. अब ये क्या हो गया बोले तो अंधेरे में तीर तरह ऐसा दिख रहा.
नहीं सर, निशाने पे लग रहा आपका तीर.
लग रहा नहीं लगे तो दिल पे लगता. So definition of budgeting and notes and explanation. Budget, budgeting, budgetary control. Let's see now. वो budget था. Okay, now let's see the budgeting. Budgeting means it's a process of preparation of budget. It involves planning how an organization is expected to generate, allocate, and use. Please, these 3 words are very, very important. Budgeting means planning, right? Preparation, the process of preparing. The organization expected to generate, allocate, and use its financial and other resources during the future. Definition of National Association of Accountant, USA. Budgeting may be understood as the process of planning the flow of financial resources into, within, and out of an organization for a specific future period. It also involves allocating the expected resources among the projects, departments, functions, responsibility centers, activities, and time period. So resources allocation between the projects, on which project, which resources to be allocated, on which department, which resources to be working, for which work, for which function, which resources to be allocated. Responsibility centers. Interpretation. The organization first estimates what resources will be available. पहले फाइंड आउट करो कितने कौन फ्री है, पहले अंडरस्टैंड करना है who is free. Then management will decide where should those resources be used to achieve the organizational objectives. To achieve the organizational objectives. To achieve the organizational objectives. GR Growing Shield specified the meaning. Budgeting is the formulation of plan for future activities. Budgeting is the formulation of plan for the future activities so the management can replace unplanned or hit and miss performance with careful established objectives. Budgets also provide a yardstick or a benchmark for measuring the deviation from planned performance. Budget versus budgeting. Budget is a financial statement or a plan. What is the meaning of budgeting? The process of preparing the plan. Budget is an end product. Budgeting is a process. Budget will show expected results. Budgeting will determine how expected results are developed. Maybe monetary or quantitative, includes forecasting, planning, and allocation. Used as a benchmark, create the benchmark. Memory line, budgeting, create the budget. Budgeting will create the budget, budgeting, budgetary control. So, end of what we are understanding now, budgeting means creating the budget. The question will goes to Ruhi. Budgeting is the best described as recording the transactions after they occur, preparing the plan for the future activities and allocation resources, preparing only the income statement, calculating the historical variance. Ruhi, Mariam.
Sir, it's B.
Is B is the right answer, preparing the plan for future activities and allocating resources. Answer is B. Budget is a forward looking planning and the resource allocation process. Question number 2 will go to Rikesh. Which of the following best distinguish a budget from the budgeting. Budget from the budgeting. So a budget is a process while budgeting is a statement. Like
Option C.
relates only to
Budgeting.
expenses. Budgeting is the process while the budget is a end product. There is no difference. What is the right answer?
Option C, sir. Budgeting is the
Option
process.
C, budgeting is the process. Excellent. So C, remember, budgeting is the process, budget is a. Very good. Mohammed, question number 3. आवाज आई करा. मैं आया तो खाऊं. Yes.
Inshallah.
बोलो.
Important benefit of budgeting is that it's provide the guarantee of company.
One important benefit of budgeting is that it provides a guarantee, no, benchmark against which the actual performance can be evaluated, a elimination of the uncertainty, exact कुछ भी नहीं रहता है ना.
B.
Answer is B. Budget establishes the targets and establishes against which the actual results can be compared. Question 4. Ruhi, a company allocates its expected available resources among the marketing, manufacturing, research, and administration. This activity is primarily as an example of financial activity, the resource allocation through budgeting, external auditing, or historical cost measurement. Ruhi, Zarif,
It's B, sir.
it's B. Zarif, I. Sheikh Zarif. Answer is
Yes,
B.
yes, sir. I think it's B, sir.
No problem. You can give me the answer for each question. It's okay. Which statement about budgeting is most accurate? One, budgeting eliminates uncertainty. Budgeting is concerned only with the cash. Budgeting convert organizational objective into operational plan. Budgeting is performed only after the year end.
C.
C.
C is the right answer. 100 crore, right? Budgeting helps translate the strategy, objectives, detailed operational plan. Next, budgetary control. So now we understood what is the meaning of budget. We understood what is the meaning of budgeting. Let us understand more about the budgetary control. Budgetary control means we already know budgetary control is a systematic process of using budgets to plan operations, measure the actual performance, identifying the deviations, and take the corrective actions. According to ICMA, the central idea is establishing budgets, assigning responsibilities, measuring the actual results, comparing and analyze variances, and correction and revise. Budgetary control is therefore not simply preparing a budget. The real control begins after actual performance becomes available. In simple explanation, suppose a company monthly advertisement budget is 100,000 and actual advertisement spending is 125. The variance is 25. The management should not stop at identifying the 25,000 variance. The management must ask why it has happened, who is responsible, its corrective actions required. Does the budget itself needs revision, the complete process is called as budgetary. So budgetary control cycle. We've seen the budgeted cycle, right? Now this is called budgetary control. First step, prepare the budget. वहां क्या हो रहा था? पहले ऑब्जेक्टिव डिसाइड हो रहा था, फिर प्लान हो रहा था. In budgetary control में step 1 is itself is a budget. Okay, so prepare the budget. Step 2, communicate the responsibilities. Step 3, collect the actual results. Then calculate compare the actuals with budgets. Calculate and analyze the variances, and investigate the cause. Take the corrective actions. And eighth one is revise the budget when appropriate. Revise the. So what is the budget cycle and what is the budgetary control cycle? So we can say budgetary control cycle is starting from budget. So CMA, memory flow, budget, then actual, then compare karo, then variance find out karo, investigate karo, correct karo, or revise karo if necessary. कल से माइक लगाएगा. Bond singer we have, so bring one mouse, one mic from tomorrow. We have mic? Okay, so keep Arpita stable. Yes. Okay. Next is essentials of budgetary control. What are the essentials of budget? Statement, future period, organizational objective, monetary and physical and compare control. ये क्या है? Essentials of budgetary control. One is budget preparation, and budgeting is the starting point. Budgeting is the starting point for budgetary control. Responsibility assignment. Managers must know what they are responsible for. What they are responsible for. Budget communication. Relevant budget must reach each department. Each department. Actual data collection. Actual performance must be measured. Continuous comparison. Actual results are compared with budgets. Variance analysis. Significant deviations are investigated. Corrective actions will be taken. Budget revision. Clear? Go. Essentials of budget, essentials of budgetary control, budget cycle, budgetary control cycle. Cycle means repeat every. Rikesh, are you understanding the class?
Yes, sir.
Zarif, are you getting bored? Or you are enjoying the class?
No, sir.
Yes.
Sir.
Huh? Imamuddin, are you there? Imamuddin, you are planning to write October? Any group? पूछ के बोलो मैं अक्टूबर में लिखना चाह रहे तो tomorrow you must be in the class. Objectives of a budgetary control. The planning. First one क्या है objective? Planning. So budgetary control force management to think about the future. Management determines. So budgetary control will force the management to plan your future, plan your future, plan your features. The objectives, strategies, activities, required resources and budget. Example, a company want to increase sales by 20%. A company want to increase sales by 20%. The management may needs to plan marketing expenditure, production capacity, inventory, employees, working capital, distribution. So the budget translates the strategy into a specific plan. Strategy into a specific plan. Second one is coordination. So सबको मालूम है ना, सबको inform करना है. This is our target and this is the strategy like this. Different departments cannot prepare their plans independently. Example, this is a beautiful, objective. Is a sales department expects sales 100,000 units. Okay, sales department expect 100,000 units, but the production department can produce only 80,000 units. This is a coordination. Sales को 100,000 चाहिए था, production produced only 80. Budgeting force sales plus production plus purchase plus HR finance department has to work together. First objective is planning. Second objective is coordinating. Third objective is communication. Budgets communicating management's objective and expectation throughout the organization. Example, sales managers sales target दे दो, प्रोडक्शन मैनेजर को प्रोडक्शन टारगेट, परचेजिंग मैनेजर को मटेरियल रिक्वायरमेंट, फाइनेंस मैनेजर को कैश रिक्वायरमेंट. Each manager understand what must be achieved plus resources available plus responsibilities assigned. This is the objective of the budgetary control: planning, coordination, and the communication, and the control and the performance evaluation. The budget becomes a benchmark or yardstick. Example, sales budget is 100,000, actually 950, variance is 50, unfavorable. Material cost 300,000, but actually incurred 340, 40 is unfavorable. Labor cost is 200,000, 190, 10,000 is favorable. Clear? The management investigates the significant. The four major objectives. Sixth one, four major objectives easily memory: PCC, planning, coordination, communication, and control. What are the objectives of budgetary control? PCCC. है ना? PCR test. याद है? Planning, coordination, communication, and the control. These are extremely important concepts for CMA questions. Management by exception. Management by exception. One major advantage of the budgetary control is management by exception. Management does not need to investigate every minor difference. Instead, attention is focused on significant variances, important problems, areas reporting actions. हर छोटी चीज देखने की जरूरत नहीं है. वेरियंस जरा बड़ा है So we get example, department A, B, C. The budget is 100,000, actual is 101,000. Okay. Budget is 200,000, actual is 260, 150, 151. So files where you will focus first. 30% variance. Okay. So here management should primarily investigate department B. So this is the management by exception. Major advantage of budgetary control. What are the advantage of the budgetary control is clear objectives, planning, resource allocation, coordination, communication, performance evaluation, management by exception, cost conscious, accountability, decentralization, motivation, future decision making, standard costing, faster authorization. Next chapter goes ahead. Standard. When we are reading in the financial statement analysis, we found the word real ratio analysis. When we are reading the ratio analysis, we found the word budget. So when we are reading the budget, we found the word, the link, and some are in that topics, that part, and some are in. So indirectly, second part is linked with the first part. Ninth point is important CMA advantage participations. If the manager participate in preparing their budget, okay, he may understand the target better. Manager perform he may understand the target better, accept the target more readily, provide the better organizational information, become more motivated and achieve the targets, and this is called as participating budgeting. However, participation can also create a risk. Budgetary slacks. Managers may intentionally underestimate revenue or overestimate expenses to make the budget easier to achieve. This is very important. Limitations of budgetary control. So budgetary control is useful, but it is not. Forecast may be incorrect. Forecasting may be incorrect. Budgets are based on the assumptions about the future. If assumptions are wrong, the budget may unrealistic. Example, expected raw material price is 10 per kg. Unexpectedly, market price is 16 per kg. The original budget may no longer be approved. Uncertain things, right? Natural, like COVID came, automatically the market prices are increased, decreased, uncertain thing. So next is budget can become outdated. Budget can become outdated. Business conditions may change because of inflation, technology, competition, government regulation, exchange rate, customer behavior, right? Therefore, budgets should not be treated as permanently fixed when uncertain underlying conditions materiality changes. Excessive detailed can reduce the managerial flexibility. If every small expenditure requires a strict budget approval, manager may lose the flexibility needs to be respond quickly. This is sometimes called over budgeting. हर छोटी चीज बजट है 10 दिन हम कितने चाय पीना रोज इसको मैनेजर का प्रोग्राम है और चाय पीने को भी लाके मैनेजर सर बोले तो ये ओवर हो जाएगा ओवर budgeting. Unrealistic budgets can demotivate employees. A budget should be challenging but attainable. If targets are impossible, employees may lose motivation, manipulate information, ignore the budget, reduce the budgeting can create dysfunctional. Manager may focus only on achieving their departmental budget rather than helping the entire organization. Example, the purchasing manager may excessive inventory simply to obtain a quantity discount and meet the purchase target. The purchase department may look good, but the company may suffer from excessive. Budgetary slacks. Manager may build extra expenses or lower revenue expectations into the budget. Example, manager realistically expected sale of 2 million, but submit the budgeted sales of 1.7 million. So that achieving the target becomes easier. The difference may represent budgetary slacks. Budgeting is costly. Preparing, coordinating, monitoring, and investigating the budget requires management time, accounting resources, information system, meetings, performance report. For every small organization, the benefit should be exceed the very important for the CMA point of view. A budget should not be a rigid target regardless of circumstances. So effective control means investigate the variance first. Do not automatically punish the managers. Simply become the actual result differ from the budget. The variance may be have resulted from external economic challenges, changes in marketing process, unexpected demand, government regulations, event behind the manager's control. This connect the budgetary control with the responsibility accounting. Scenario exercise. Okay. A production manager monthly cost budget is 300,000, actual was 350. Investigation reveals that the government expectedly increased the electricity tariff during the month. That's why the bill is more. So what is the question? Should the production manager automatically be blamed for 50,000 unfavorable variance?
No.
Answer is no. The management should distinguish between the controllable factors and uncontrollable factors. If the manager could not control the electricity traffic increase, it may be inappropriate to evaluate the managers negatively for the entire variance. Answer is the first, this Mohammed principal purpose of budgetary control is to eliminate the business uncertainty or compare the actual performance. Yeah. The question goes to Mariam. Which of the following is most closely associated with management by exception?
Sir, it's B.
Answer is B. The manager concentrate only on significant amount. Like in our example, 1%, but we focused on 30%. Answer is B. Management by exception allows senior management to focus attention on a significant deviation restriction. Organization for budgetary control, notes, explanation, and exercise questions. What is this now? Organization for budgetary control. Matlab, what is the meaning of organization? Who should be there? क्या क्या रहना? Meeting room है, खाना खाने table है, pantry is there, and a table, sitting table, TV, infrastructure manager and a coordinator, some है a reception. It's called an organization. Same line, budgetary control, organization for budgetary control. मतलब to control what they need, accountant, auditor, internal auditor. Who need it? Who will control?
Management, sir.
Very good. So a good budgetary control system requires a clear organizational structure. Clear organizational structure. The chief executive has overall responsibility and normally delegates administration of the budgeting system to a budget officer, budget controller, budget director. Organizational structure. है ना? So ये पूरे opportunities रहते CMA pass होने के बाद. You can become a budget. Yeah, yes. Okay. So who is the budget officer and budget controller? Okay. So budget officer does not normally prepare each departmental budget personally. Budget officer will not prepare. Individual functional managers prepare their own budgets. Individual managers will prepare the budgets, while the budget officer supervise, coordinate, monitor completion, review departmental budgets, and reports performance to the level. So your responsibility, if you are a budget officer, you have to make sure that all other department individuals will prepare, okay, and you need to evaluate and you need to report to the top level manager. Main responsibilities, budget officer means coordinator, supervisor, monitor. He or she should coordinate budget of different departments, ensure the budgets are complete on time, review the budgets submitted by the functional manager, identify the inconsistencies between the departmental budgets, monitor actual departmental performance, identify the deviation from the budgets, assist in corrective actions, report performance to top management, understand both the business operational accounting. Clear? Next is budget committee. एक है budget officer, दूसरा है budget committee.
Finance analysis, people also safety.
बजट है ना, ये अलग है. Budget committee assists the budget officers, managers say budget officer will report to the. Okay. So a budget committee assists the budget officers and normally includes the head of important departments. The committee reviews departmental budget, coordinate them, and approves the final budget. The functional head remains responsible for implementing their respective departmental budget. Typical members are budgeting officers, sales managers, production managers, finance managers. Dekha. And this is the part of committee. Finance managers, purchase managers, HRs, and other functional heads. Main focus on review, coordinate, resolve conflict, approve, monitor, and implement. Example, sales department proposed sales of 100,000 units. Production department says maximum capacity is 80,000. The budget committee must coordinate the plan and determine the realistic organizational. Organization में कौन है? Officer, budget officers, budget committee. Budget committee means budgeting officer and all departmental heads. budget centers. Budget centers. A budget center is a part of the organization for which a separate budget is prepared. It may be a department, a separate department. Budget center is a separate department. A section of the department, a division, another identifiable organizational unit. Budget center makes performance appraisal and cost control easier. Example, a manufacturing company may establish a sales center, production center, purchase center, maintenance center, administration center. Each center may receive the own budget and responsibility target. CMA connection, budget support center, responsibility accounting plus performance evaluation plus cost control. Okay, budget centers, responsibility to the actual accounting karo, performance evaluation karo, then cost control. Fourth one is budget. First one, budget officers, budget committee, budget centers, and budget. A budget manual is a formal document explaining how the budgeting system should operate. The resources state that it defines the duties and responsibilities, relationship among the functional areas and approval authorities, timetable, forms, budget periods, procedures, and the accounting methods. What should a budget manual contains? Very, very important. Budget manual में क्या-क्या रहता? First one is the objective of the budgetary control system, duties and responsibilities, budget approval authorities, financial power of the managers, budget preparation timetable, performance reporting timetable, standard form and number of copies, identifiers of the budget centers, length of the budget period, control point, procedure to be followed, and accounting methods to be used. Easy, remember who, what, when, how, authority. Okay, who, what, when, how, and authorities. A budget manual tells employees who prepared it, what should be prepared, when it is due, how should it be prepared, who can approve it. Budget officer, budget committee, budget center, budget manual. Budget period is also very, very important. Budget period. A budget period is the length of the time for which a budget is prepared. Length of the time for which the budget is prepared. Where's the remote?
Yes.
A budget period is the length of the time for which the budget is prepared. Appropriate period depends upon the several factors. Type of budget, factors affecting the budget period. Type of budget, a capital expenditure budget. A capital expenditure budget may cover 3 to 5 years. While sales or purchasing budget may cover only 1 year or shorter period. Nature of demand. Seasonal products may require shorter budget period. Seasonal budget है, seasonal product है, small period. Availability and finance. Organization with limited working capital may require shorter operational planning period. Length of the business cycle. Cycle industries may need long-term budgets covering the business cycle together with a shorter budget for current control. Need for control. Greater needs of control generally require shorter budget periods. So budget period depends upon the type of the budget, nature of the budget, availability, and these things. Sixth one, multiple budget periods. Multiple budget period. Organization may simultaneously prepare long-term budget, annual budget, and short-term budgets. Different budgets. Okay, company में multiple budgets है थे. Long-term budgets, annual budgets. First one, budgeting officer, budgeting committee, budgeting center,
Budget manual, budget period.
budget manual, budget period, multiple budget periods. Continuous budgeting system. Continuous budgeting system. A material explains the continuous budgeting as a maintaining planning over changing periods so that short-term developments are incorporated without losing sight of the long-term objectives. Example from the material X Limited prepares a budget for January 2023 to December 2020, December 2003 to 2003. Expected sales are 12 crores. Expect year-end cash surplus 1 crore. Based upon this, the company plans to purchase the equipment costing 2 crores. However, after the first 3 months, budgeted sales are 3 crores, actual sales are 2 crores. The original equipment purchase plan may therefore becomes difficult to achieve. So continuous budget solutions. At the end of each quarter, the organization prepare another 12 months plan. Example, 1st January to December, April to March, July to June. This allows the management to incorporate a new information while maintaining the forward or looking planning organization. What is we are understanding here? Continuous budgeting system should be there. If they prepare a 1 year budget only one time, in between they want to buy something, may not be planned. So every quarterly they are preparing the budgets, so that will help the management to take the actions. Memory line is what is this? So complete the period. Complete the period. Add a new future period is equal to continuous and rolling budget.
Every month there is a budget discussion too, right?
Depends.
Depends on the
Monthly, quarterly, half-yearly.
depends on the company.
Nature of business, nature of season. For example, fruits, season. Key factors and principal factors. A key factor, this is very, very important for the examination pattern. Key factors were there. So a key factor is limiting factor that influence the preparation of the other budgets. Since the functional budgets are interdependent or a constant in one area can affect the several other budgets. Example of key factors: limited sales demand, limited raw material, limited plant capacity, limited labor, limited finance. Example, the sales count maximum expected sales is 10,000 units. Even if the factory can produce 20 units, the production should generally be planned around that what can realistically be sold. Therefore, sales becomes key factor. Raw material constant. Constant means what we are expecting we are not getting. Limitations is there. Shortage is there. Okay. So material market demand 50,000, but available raw material permit only for market में requirement कितना demand है 50,000. But here only 30,000. The raw material availability becomes the key factor. 50,000 we need, but we have a limit of 30,000. So यहाँ problem क्या हो रहा? Raw material. Now this is the key factor. Why you not reach? Key factor is raw material. So complete budget organizational flow is Chief Executive Officer, Budgeting Officer or Budget Controller, Budget Committee, Finance Manager, Budget Centers, Departmental Budgets, coordination review, final budget, actual performance and comparison. First question, budget organization. ABC Limited has the following manager: sales manager, production manager, finance manager, purchase manager, HR manager. The CEO appoints the finance controller to coordinate the annual budgeting process. Annual budgeting process. So, who has a overall responsibility for budgetary control? Who acts the budgeting officer? Who should prepare the sales budget? Who should coordinate all the departmental budgets? What body should review the approval of the final budget? First question is, who has the overall responsibility of the budgeter control? Who has the responsibility?
Budget.
Chief Executive Officer has the responsible for full show. Okay. Who acts as a budgeting officer? Finance controller appointed by the budget officer. Who should prepare the sales budget? Sales manager. जो डिपार्टमेंट का उन्हीं बनाना है. Who should coordinate all the departments? Budgeting officer. What body should review? Budgeting committee. Committee will review. Exercise to identify the key factors. Maximum sales demand is 40,000. Maximum sales demand is 40,000. Production is 60,000. Raw material available enough for 50,000 only. Then what is the key factor here? Next, budget period. Choose the most appropriate general budget horizon. Construction of a new factory, monthly cash management, seasonal fashion inventory, annual departmental planning. Suggestion is construction of a new factory, long term. Which budget? Monthly cash management, short term budget. Seasonal, short term. Annual operational planning, annual budget. Vikesh, who normally has overall responsibilities for the budgetary control system?
Chief Executive.
Chief Executive, very good. Mariam, which of the following best description of the role of a budgeting officer? Personally prepare every departmental budget, coordinate and demonstrate the budgeting process, determine all the sales prices, perform the only external.
B, sir.
B is coordinate and the Ruhi, the documents that explain the budget responsibilities, procedures, approval authority, and timetable is called as
D, sir.
B, budget manual. Very good. And Zarif, a department or a other organizational unit for which a separate budget is prepared is called as budget centers.
Budget center.
Very good. A conceptual question. Can the key factor remains permanent? No. Sometimes shortage, but not every time. So no. So the current shortage of the raw material may be later disappear. Sales may becomes the constant. Production capacity may become the restrictive or any other limitations may emerge. The key factor may be identified before preparing the interdependental budget and review the conditions. Budgeting officer coordinate the budgets. Okay, this is the summary. Budgeting officer coordinate the budget. Budgeting committee review plus coordinate plus approves. Budget center unit for which budget is prepared. Budget manual rules, responsibilities and procedure. Budgeting period is time coverage of the period. Continuous budget is maintained the forward looking forward. Key factors are influenced by the So here the management is not providing any tea, coffee. So welcome back after a short notice break. You will know what. Okay. So classification of budgets, and we'll see some of the notes, explanation and exercise and some questions. So what is the topic now? We understood what is the meaning of budget, budgeting, budgetary control, and we understand the essentials, we understand the cycles. And we understand the organizational structure of the budget. So let's understand the classification of budgets. Quickly, classification of budgets. Budgets can be classified from the different point of view. Based upon the conditions, based upon the period of time, based upon the content, based upon the functions, based upon the flexibility, activities and capacities. Classification according to the conditions. According to the conditions, basic budget and the current budget. Basic budget and write down please, very important. Classification according to the conditions. First one is basic budget, current budget. Basic budget is prepared for use over a relative long period and is not normally changed according to the current conditions. Basic period is for long term. Current budget, and it is based on the standard or expected conditions rather than continuous changing circumstances. This is basic means base. Standard budget is called as basic budget. Example, a company establishes a basic operating plan based upon the normal production conditions and continuous using. It is as a reference for over a long period. CMA memory line basic budget is equal to long-term reference budget based upon the standard and conditions. Basic budget is a long-term reference budget based upon the standard and conditions. A current budget relatively current are revealing the conditions and it's normally prepared for a shorter period. Normally prepared for a shorter period. Because it reflects present circumstances, it can provide more realistic targets for monitoring the performance. Example, suppose a company originally expect material 10 per kg, but market price is 14 per kg. The budget prepared using the prevailing 14 price is closer to current budget. So conditional based upon the condition, the classification will be the basic budget and the current budget. Classification based upon the period of time. Long-term budget, short-term budget, current budget and interim budget. Conditions, basic budget, current budget. Yes. Previous
पेज बताइए एक मिनट
जल्दी करो Okay. So next is based upon the period of time, long-term budget, short-term budgets, current budget and interim budget. Long-term budget according to the material Long-term budget generally covers 5 to 10 years. They are useful for activities that requires long-range planning, particularly industries with long gestation period. Example, the given include the capital expenditure budget or research and development budget. They may sometimes be expressed in physical quantity or percentage because precise monetary values can be difficult to estimate for into a future. Short-term budget. Your resource describe the short-term budget as generally 1 to 2 years. They are useful where the future trends cannot easily be described over the long-term period. Example, material budget, cash budget. They may be expressed in both the quantity and value. Example, a manufacturing company prepares next year's material requirement 500 kgs, 500,000 kgs, and material cost is 202.5 million. This is the short-term operational budget. Current budget. Current budget means 1 month or 1 quarter. Instead of revealing only on the annual budget, and management may prepare revised quarterly budgets based upon the current demand, current selling price, current material price, and current economic conditions. D1 is interim dividend. Interim budget. An interim budget is prepared between two normal budgets period. Two normal budget periods. A material given as an example where changes in management creates a need for separate short-term budgets before the next normal budget cycle begins. Normal budget year is January to December. New management takes over during the year. A separate budget may be prepared for the remaining before the regular annual budget cycle resumes. Classification according to the content. वो क्या था पहला वाला? Classification based upon the conditions. Classification based upon the time period. Classification according to the content. Physical terms, monetary terms. Budget in physical terms means quantitative. Example 50,000. Budget is monetary terms. Example plans. Classification according to functions. Operating budget functions. Operating sales, distribution functions. Operating budgets related to the day-to-day operating activities or functions of the organization. Example sales budget, labor budget, plan. Next is operating budget, financial budget, and master budget. Financial budget related to the financial matters such as cash receipt, working capital, capital expenditure, budgeted incomes, budgeted return earnings, budgeted balance sheet. Example, CMA operating budget is equal to activity. Financial budget is equal to financial. Master budget. Master budget क्या है? The master budget is the overall summary that integrates the organizational functions, operations, and the financial budget. Related to coordinated to activate differently. Flow. Operating budget plus financial budget is the
Master.
flexibility. Fixed and static budget and flexible and variable budgets. This is the main things will come here. Fixed or static budget. A fixed budget remains unchanged even if the actual level of activity differ from the plan. Example from the concept, budget prepared for 60% capacity, actual activity is 90% capacity. The fixed budget remains based upon the 60%. It does not automatically adjust the actual activity. Fixed budget is equal to one activity level. Flexible budget. A flexible budget change according to the actual level of activity. If the company initiates 60% the capacity but actual operates 90%, the budget can be recalculated for 90%. Adjusted activity. Very important, assume variance cost, variable cost 8 per unit, fixed cost 1 lakh, 100,000. Original budget activity is 10,000 units. So standard budget cost is variance 10,000 into 80,000 fixed is total is 180,000. But actual quantity becomes 15,000 increased. Then variable cost is 120, actual fixed cost is 100. So this given management more meaningful comparison to the actual level of the quantity. When flexible budget can be useful, your resources state that the flexible budget is particularly suitable when uncertainty exists. Uncertainty exists 60 to 40 हो सकता, 40 to 60 हो सकता. Unpredictable sales, seasonal activities, change in the level of demand, limiting the factors, new business, frequent new models, make to order and business things. So key fixed versus flexible budget. Activity level, one level, different levels. Adjuster does not do adjustment. Flexible budget will do the adjustment. Nature rigid, adaptable, cost classification not necessary. Necessary performance comparison difficult. It's more meaningful. Forecasting less adaptability. Selected of a change activity assumption assumes the conditions remains relatively stable but after changes. So the source specially emphasizes rapidly cost classification, cost ascertainment, comparison with the actual results, and the forecasting and underlying assumptions will be there. Classification exercise. A company prepares 7 years expansion plan. Answer is long-term budget, right?
Yes.
A manufacturing manager prepares a next month material requirement. Mariam, next month material requirement. Current or short-term budget.
Current.
A company prepares budget for 50, 70, 80 and 100 capacity. Flexible, right? A company prepares one budget at 75% activity and does not change. Fixed budget, right? Only one level, one activity, fixed budget. All functional and financial budgets are combined into one overall plan. That is called fixed budget plus flexible budget is equals to master budget. And master budget. Exercise 2. Fixed versus flexible budget. A company cost structure is variable cost 12 per unit, fixed cost 150, original activity and actual activity. 20 multiplied by 12 required to calculate the flexible budget, fixed budget. Now, do it. So column variable cost plus fixed cost, quantity up column 20, 25, 12 into 20, 12 into 25, 150, 150 same. So fixed budget 20 into 12, 240, add fixed cost 20, 390. Flexible budget 25 into 12. Fixed budget में क्या है? Only one level of activity. Flexible में next level of activity also will be prepared. A budget assigns to remain unchanged. A budget designed to remain unchanged regardless of actual level of activity achieved is called as a budget designs to remain unchanged regardless of actual level of the activity. Flexible budget, static budget, rolling budget, master budget. Static budget. B. Next question is,
Fixed budget.
which of the following would most likely be classified as an operating budget? Cash budget, budgeted balance sheet, Sales budget, capital expenditure budget. Sales is the operations, right? See, sales budget. A company initially budgeted 70% capacity, but actually activities are 90%. Management recalculated expected cost at 90%. This is called as
Flexible budget.
flexible budget.
Flexible.
Excellent. A budget that integrates the operations and the finance budget of the organization is called as master budget. Master कई बार में करना पड़ता है इजी है भूख लग रही क्या चाय पीते Fifth question, Rikesh. Which budget is most useful when the actual level of activity is significantly different from level of original plan?
Flexible budget.
Very good answer. Flexible budget. Sixth question will goes to Mushraf Ali, Ashraf Ali. A budget prepared between the two normal budgets. Very good. Interim budget. Excellent answer. Very quick answer. Good. Which of the following is a major advantage of flexible budget? It eliminates the variable cost. It automatically guarantees the profit. It allows the meaningful comparison of the different activity levels. It remains unchanged. Arpita. C is the answer. Conceptual question. A company prepares its manufacturing budget based upon the production of 100,000 units, but actual production was 70,000 units. Management compares the actual cost directly against the original 10,000 unit static budget and concludes the production department performed very efficiently. Is the correct answer? No. The difference may simply because of the lower level of activity. For meaningful performance evaluation, management should adjust the budget to the actual activity level by using flexible budget before evaluating the अपन दिए थे budget 100,000 को but production was 70,000. Now they are saying they save the money, they save the money. No, actually the activity is decreased. So if they prepare the flexible budget, they can answer. CMA examination memory chart. Condition make two type of budgets. Basic budget and current budget. Period, long term, short term, interim. Current budget and interim budget. Content, physical and material, monetary. Functional, operating, finance and master. Flexibility, flexible, fixed. Most memory line is fixed budget. So next session we understood the meaning of budget, budgeting, budgetary control. We understood the essentials of budgeting and we understood the budgeting cycle, right? Budget cycle and budgetary cycle, essentials, advantages, limitations, right? And the classifications. So next session will be very soon, or I will record the session. I will provide you because that should be very peacefully. You need to sit and prepare same time. Okay, when I'm going fast, you can stop and you can review. I will try to record the session and I will give you the recording because the preparation of budgets, okay, it's not possible easily because you must not bringing the calculators, not bringing with the full equipments. So problematic areas, I will record the video and I will share. Once this will give you how to prepare all the budgets, which are very, very important. Okay, then you are ready for the 20% weightage from the CMA things. So thank you very much for today's session. Giving the thanks. Any doubts? Any doubts?
No, sir.
No doubts? Okay, thank you. Have a good night. And I will share you
Thank you,
the
sir.
video and I will share you the 30 questions. Inshallah, I will try to share tomorrow. Okay, thank you.